Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide mediation and valuation services based in St. Louis, Missouri. Today, we will discuss M&A sports franchise valuations with Edwin Draughan. Edwin is a sports franchise valuation expert based in Los Angeles, California, and has been a member of Park Lane since 2017. Park Lane is a boutique sports-focused investment bank founded in 2005. Edwin's primary responsibility at Park Lane is to lead the firm's efforts with sports franchise valuations and due diligence, which also includes the client relations, market awareness, deal sourcing, and execution. He also plays an integral role in the firm's sports franchise M&A advisory, early-stage capital raising, and traditional real estate divisions in a typical process of valuing a business, right? We're usually looking at like fair market value, or that's one way to look at it. And we would say, okay, what's the value to a willing buyer and a willing seller? But in this type of situation, it seems to me that you also have to look at, okay, here's what the minimum would be, and here's what all the competition is going to drive. It's sort of like how far can competition drive up the price? But tell us more about like a typical process of looking at and valuing a sports team.
So I like to answer this in kind of two ways. On one hand, wearing my sports valuation hat, we would do a typical process. We would look at a team relative to comparable teams that have transacted, look at the differing factors, whether that's market or league kind of factors, and then adjust based off of that, right? So you're looking at the ultimate revenue, creating a revenue multiple, and then adjusting it based off of factors. And then I can put on my sports M&A advisory hat and know that when you go to market, the market more or less determines the value of a team. You can say this team is worth $2 billion based on all the information, based on present transactions. But if you get a bidding war between 4 or 5 billionaires that have no problem throwing down a couple billion or overpaying by a couple billion to get an asset that they like, then the actual price can skyrocket. And this has happened a couple times in the past, and it's one of the reasons why having experience in the space and understanding kind of the subtle nuances in the space is integral to being a valued advisor.
Well, and I think you brought up an interesting nuance in business valuation, which is we can value something, we can place a value on it, but it doesn't necessarily mean that is the price
exactly
that it's going to sell for. And that It doesn't always make sense in people's heads why there could be multiple values even to the same business, but it sometimes is in the perspective of the buyer, right?
Yes, exactly. I mean, at the end of the day, there's, running a traditional kind of sell side process, whereas advisors, we ultimately want to get the highest price possible. So positioning that asset in a way to receive multiple bidders that will ultimately drive up the price is key, and there's a unique strategy to that. But on the other hand, if you're, I'm often asked to do just traditional valuation services, for whatever reason, whether they're tax reasons or, litigation, or somebody's preparing or just wants to know what, that asset will fetch on the fair market. I mean, on the market. That's a completely kind of different process. So it's a very kind of nuanced area, but it's fortunately something that I really like.